So we've seen some very aggressive growth in China M&A in 2015. The number of transactions increased by 37%, which is impressive in its own right. But if you look at the value of those deals, that went up by 84%. $734 billion of transactions conducted, and importantly, there were more than 114 deals in excess of $1 billion. That in itself also a record. So we're seeing extremely aggressive M&A growth rate in China in 2015, and we're expecting those trends to continue through 2016. The private equity industry in China, or financial investors in China, also a very strong record year. The number of transactions grew by nearly 80%. The value of those transactions grew by something like 170%. So very, very aggressive growth. But if you look at who's doing those transactions, so for example, there were 27 deals in excess of $1 billion. That's a very big number. But if you look at who did those transactions, all apart from 2 of those 27 deals above $1 billion were carried out by domestic financial investors. And I'm using this term financial investors as distinct from private equity, because what we've seen and what we're seeing is the entry into a market of a whole class of financial investors outside of traditional private equity. So we're seeing financial institutions, in particular the big insurance companies, doing private equity style investing or direct investing. We're seeing the investment vehicles for high net worth individuals. We're seeing private company funds, we're seeing state-owned enterprise funds, we're seeing government and industry funds all participating in the direct investment industry. So that very strong growth that you're seeing is in fact now, to a greater or less extent, dominated by these non-traditional forms of private equity, and also the domestic private equity industry. A very powerful year for them. There's a lot of activity in private equity on the exit side is around the A-share market. And when funds are coming into deals, that favors renminbi investment over foreign currency investment. So a banner year for the private equity industry, but different kind of investors in there, favoring the domestic renminbi denominated investors, and a little bit of a tough environment for some of the foreign private equity. So there's quite a few mixed messages in what overall was a very, very strong growth for direct investing in China. We expect the deal activity in China to continue to be strong. We're seeing that within PwC's own business, within our pipeline. We're seeing that strong activity continuing into 2016. We think there are a lot of fundamental drivers of the market for M&A. So although the economy in China is slowing, although there's a lot of turbulence in stock markets, we think there are some very fundamental trends underpinning a very strong growth in mergers and acquisitions. We expect to see strong outbound. We expect to see strong domestic activity. We expect private equity to continue strongly. We expect venture capital to continue strongly. So on all fronts, we're expecting to see good growth in M&A. A lot of trends underpinning that, but perhaps one overarching trend is simply Chinese companies maturing, using inorganic growth strategies as a way to find growth, so using mergers and acquisitions as a way to grow as opposed to organic growth in a slower economy. That perhaps is the greatest overall driver among several that I think will propel the M&A market to record highs in 2016.